The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your lovable, squeezably soft host, David White, for another journey into market excellence as we go one more hour into the breach, dear friends. And, of course, had a little bit of action out here in just the last 5 or 10 minutes, and that is the Fed minutes came out, and contrary to what the members have been saying for the last couple of days, it showed that maybe there's a little bit more dovishness in the Fed out here, and maybe it's just a good excuse. Maybe it's just a good excuse for a little bit of short covering in the market. And we will see how this develops. But I don't think anything has broken the downtrend. There are a lot of stocks that have hit support levels. And saw a lot of action in gold here. I think it moved about $10 down and back $10 up. So we will be watching this pretty closely. What do we have for gold up? And gold's up $3.50 now. It was down to 1205 or something earlier, or something like that, 1207. So get a little bit of action out here. Certainly some life in this market, and it seems like the gates of money open up every time the VIX hits 18, which it almost hit again today. And kind of interesting to watch. But my guess is that this too will fizzle rather quickly. But we shall watch. I have a feeling they caught a lot of people unaware with this rally attempt, but it certainly looks like everybody wants to pile in at 18 on the VIX. And we're going to talk a little bit about the VIX today because it has changed, and there will be some differences in it, but not as much as the naysayers would like to say. As we get started out here, let's take a look at the markets. And what do we have? S&P up 15 points now at 1950. We have 2.5 billion shares, and pretty brisk day. Some big volume here in the last 15 minutes, and we'll see just how high this can go. But I have a feeling that a lot of people wanting to step in at these lower levels chose so to do today, and I think that some of the cash coming out of Europe has been put to work this morning. But we'll see just whether or not we see sellers come right back in, as we've seen the last couple of times out here. But to me, it certainly looks like we're going to continue to see a great deal of volatility. And the question is whether or not the bears can break that 18 mark on the VIX, because that's looks like almost a machine coming in there and hammering it every time we get near that level. Everybody has to scream. The question is whether or not this is the Fed and the Treasury or the banks out here moving the markets, or if it's actually the markets out here. We've talked a great deal about the value at risk model that most of the broker dealers are using out here, and the problem would be becoming an endless loop of selling because they have fairly high levels of how can you say it, very high levels of margin at the moment. In fact, we've got larger margin than we've had in 1987 and in 2000. So this is a market made on margin. If that margin started to come out, you could see a huge down spiral. And what I am waiting for in this market, we did get down to, 1925 on the S&P cash. And I think everybody was looking for the retest so that they could go once more hog wild into the long positions. And a nice bounce here at 18 points. The question is, what is going to be at the end of the day here, and will we see people just come back and resell this once again? My belief is that we are headed down to 1925 before any meaningful bounce, or at least short, medium-term bounce in this market. But market's trying to make me a liar on this thing here today. But I suspect that this will be one of the hardest markets to hold short, and also one of the most profitable if you have the intestinal fortitude to sit on your hands. So as we look at what's going on here today, I think I kind of remember, I'm all wrong on that. It was actually 1998. We'll change that. Amid the Asian financial crisis and the collapse of long-term capital management on this day in 1998, the Dow Jones Industrial Average slides 10 more points to close at 7731, down 17% in less than 3 months, mostly based on problems that long-term capital management caused. And, of course, at this point, we started seeing a lot of Fed intervention in this marketplace. And my guess is that they couldn't quit and cause the bubble of 2007, 2008 in the housing market. And I think the basis of all those, including the basis of the dot-com bubble, were all based in this 1998 October, November decision time, when the Fed decided to go, as they say in airplanes, if you look at the controls, some are round like wheels, the other ones that are round like balls are the throttles. And the old saying from World War II was balls to the wall. That meant put the throttles all the way forward to the firewall. And they never really looked back and figured out that they needed to start pulling out cash a lot sooner than they did, causing multiple bubbles. And I think we're kind of in one of those right now, up 18 points on the S&P cash. As we speak, 2.6 billion shares. So a lot of people wanting to come in here and buy this move today, or at least a lot of volume. Maybe they've got a lot of people wanting short. Still not a lot of short sellers in this market, sans a handful of specific stocks. The VIX, if you're watching on Tiger TV right now, the VIX I have up on the screen. And while it looks fairly daunting, it is not really as bad as you would think. There's a fairly good walkthrough on the CBOE site that talks about how the VIX is calculated. That changed on the 6th of October. And what they did start doing is including weekly options. Now, you would think, well, boy, weekly options, so there's got to be a bunch going on here with weekly options, right? And the answer is no. In fact, the way that they've changed the VIX, Center weights it out 30 days even more than before. It was a movement of options expiring farther out than 15 days and 45 days in the past. It is now 24 days and 31 days, which is basically, I'm going to tell you that whether you're trading weekly or monthly options, that you're basically now looking at a VIX that should probably, on the short end and on the long end, be tailed off a little bit, and the volatility in the VIX will probably come down. Now, because of the way that this thing is an oscillator, basically near-term and far out or farther out term options, and basically it's everything now above, 32 days or 33 days. And so you basically have a kind of a short term, which is that 24 to 30 day range. And then you've got the 32 or 34 days out to 90 days. But of course, there's not a lot of cash out there. And of course, the closer that all these stocks come, actually the VIX is just the out of the money puts and calls on the S&P. So when we look at this, even if you go out 90 days, those are going to be more heavily weighted. And in the old point, you really didn't go past 45 days. My understanding and reading the latest documentation from them is that they are going to go out a little bit longer. So look for a little bit less of a volatility move in VIX and more of a long-term one. If it's going to stay up, it's going to stay up longer. If it goes down, it's probably going to go down slower in the coming weeks and months. But just keep an eye on that. It is going to be a issue as we go forward, and volatility will still exist in this market. But a great deal of it, I think, is going to be caused by news-driven stuff like we've seen here with the Fed. And, of course, the market started to move before the notes came out, so someone has leaked them. I imagine that will be an issue after the bell and everybody settles down. But it looked to me fairly easily that people started running this before those Fed notes came out. So I'm thinking someone did leak them. Anyway, look for the VIX to probably be more moderated and less short-term volatility in the VIX, and more a medium-term 30 to 40-day, the premiums and the puts and the calls out of the money, puts and calls on the S&P cash, and probably being just a little less violent intraday, but and maybe a little bit more trend-driven, T-R-E-N-D, driven in the near future. So keep an eye on it. Now, last year in October, we talked about the walking dead. These are the stocks that just don't quite know that they're dead yet. Stocks like Sears and JCPenney's, Radio Shack. Radio Shack seems to be mostly dead right now. But as we look at this, Sears and JCPenney's, both having big issues today. Sears may not get product shipped to them because they cannot get, or at least people shipping to them cannot get insurance on the goods shipped to them. If they claim bankruptcy, then of course all those goods would go into bankruptcy court, and 99.9% of the time any goods are sold and never given back to the vendors that ship them, and they incur, of course, a 100% loss. JCPenney's, on the other hand, came out and said that their turnaround plans were not working, and they got smacked down. But if you want to get a good idea of a lot of these stocks that everybody already knows are going out of business, a good idea to watch is JCPenney's and Sears. These are on my walking dead list, and Sears and JCPenney not disappointing today. And, of course, The Walking Dead coming back Sunday night on AMC, one of my guilty pleasures for Sunday night. I like it mostly when they kill the zombies, when they all just stand around talking and staring real hard at each other and acting emotional. Not so much. But, I don't know, there's kind of some kind of inner fantasy. My question is just how big is The Walking Dead going to be this Sunday night with everybody thinking about Ebola? And most of these things, when you come about it, deep primal fears for people, I'm going to say in the United States, I don't know how culturally this is anywhere else, probably harkens back to the plague and other things. Anyway, we will be back in just a minute. Give me a call at 877-927-6648 or email me at path@tfnn.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're up 22 points on the S&P cash, 2.7 billion shares. And the question is just how long will this last? And I'm thinking that we're going to continue to back and forth back to 1905. We'll see just how long this lasts. But this is not uncommon for market tops to see some violent opposition before the market turns. And we'll see. But everybody's still rabidly bullish and euphoric, so I could imagine that this wouldn't change anything. And, the dollar index, it's off 30 cents, but big deal. We've had some nice range. All it has to do is hang up here to be a problem. And my belief is that we'll get more bad news over the coming months, and that will all be about the dollar and the exchange rate, and that will be pretty much it. Anyway, looking forward to The Walking Dead this Sunday night on AMC. Now that Breaking Bad is done, you just don't have a lot to look forward to on Sunday nights. And that miserable, horrible show, The Bad Wife. I think they call it The Good Wife. I call it The Bad Wife. Ugh, what a horrible show. And, of course, they're canning or trying to get rid of The Mentalist, which was a good show. They kept driving into the middle of the night. I digress. Of course, we were looking at Costco coming out with better numbers this morning. Now, next week, I continue to look forward to Citigroup, Johnson & Johnson, CSX, and Intel. We're going to start seeing probably the first guide downs in a lot of those stocks next week. So I'm going to be sitting on my hands for a while longer. And that's pretty much it. We're going to get to charts here a lot quicker. A lot of these stocks were down at lows. And the question is whether or not we're going to close it back above those. And let me update these charts. A lot of charts that I had in my newsletter. There was a definitive chance that we were going to get a bounce out of here. But my guess was that it was going to be problematic. And while the Fed may still be trying to light a candle under this market with their dovish comments, my guess is that it will be problematic at best to get any kind of bounce that lasts. And so we'll be watching this here slowly. But up 22 points on the S&P cash, 2.7 billion shares. So we are having a fairly decent reaction to the Fed minutes. But my guess is that there will be enough cold water over the coming 4 weeks with earnings that this will be a distant memory by then. And we'll be talking about QE4 and QE5 and QE6 until the cranial rectal inversion that our politicians have is over. Anyway, looking at Acadia Research Corporation, ACTG, and, you had a nice low out here with 860,000 shares. That happened on July 31st. This thing gapped up with huge volume of 1.4 million, almost, we'll call it 1.5 million shares. Or even 1.9 million shares, whatever you want to use back up here, came all the way back down here, closed under this 1452, but again, very light volume. Yesterday we had 519,000 shares, so about about 40% short on volume. A lot of these stocks look like they're going to just crawl back in. But what we have been looking at is every time these things have crawled in, we've got a small bounce out of them, and then they've gone and jumped the creek. That's what I'm going to be looking for over the next week or so. Align Technology, ALGN. This thing's been sitting on this support level that where it gapped up. That happened on, October 18th of last year, almost a year ago, almost exactly, except it's 10 days different, so not exactly at all. And that's what I mean by almost exactly, not at all. 10 days difference. But what we have is a nice gap up, 7.3 million shares. That gap has been acting as support, came down and tried it on May 8th with 1.4 million shares, getting a test yesterday on 1 million shares, and today 400,000 shares. So again, a lot of these stocks that should be finding a lot of love are not. We have extremely narrow leadership, and what I'm going to be looking at the end of the day is whether the top 5 or 9 stocks in the NASDAQ got all the attention, the top 10 stocks in the Dow, and the top 50 stocks in the S&P. And if that is what's happening out here, again, we're going to have continued extremely narrow leadership in this marketplace, and that never has at least lasted in the past. So maybe the past is prologue to our future. We'll be back in a minute. Give me a call.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I see a lot of people already saying that the die is cast and that we're just going higher and higher and higher. That is also a possibility. I will tell you that as far as I'm concerned, this is exactly at the way the .com crash started. And that was these wild spikes back into huge sell-offs, and it continued for about 6 months. And everybody always thought that we were coming right on back, that we were coming back up. And why you can't deny a short-term move here today. The question is if this is going to be anything more than a short-term bounce. And probably had a lot of people short here that weren't willing to sit on their hands, so they're going to buy. But this hasn't changed anything in Germany, hasn't changed anything in China, and why the dollar index is down 19 cents or 27 cents. Not enough of a move to say that the next at least quarter, if not 2 quarters, is going to be hugely problematic for those that import and export, depending on which way you're going. So just keep an eye on it. But we're up 26 points. And, of course, we've been down 30 points. And it will not be easy being short, but I'm going to be sitting on my hands to do so. What else do we have out here? Midday. I just wanted to see if anything else out here. And Costco's up. We already talked about talked a little bit about that. Costco had some decent numbers. Sears was off 15%. JCPenney was off 10% earlier. I think that's about the most out here. But, of course, even France was off 1%. Germany was off 1% today. And probably timing this. But why the Fed minutes may tell you what they're thinking, it hasn't changed one thing. And I think we're going to continue to see these Fed minutes move the market over the next year. But until they actually do something, I suspect it's going to be more and more like the guy, the boy that cried wolf. Anyway, you had a question in the den, and that is, what do I think of the movement in the housing market? And probably some of the ones I wanted to see how they were going to do in a day like that today would be things like lumber liquidators that had been down and beaten down fairly hard. This thing gapped down on monstrous volume, not uncommon to see these things go sideways for a great deal of time. You're basically looking at about 500,000 shares today, going back into the last low of the August 1st low of 1.3 million shares at 52.76. Is there any real sign out here that this thing's going to bounce? Don't think so yet. We'll look at another input company, which is Buffett, who works pretty hard at making sure that this stock is manipulated as much as he can. And do you have a small kind of bounce out of here? Certainly this thing did go down and test its previous low of just a few days ago that had 1 million shares. But you're probably going to have 1 million shares again today. So technically, is there any big thing happening out here? The answer is no. Is there still a gap around 125? Do I think that all things will pass, including this? The answer is yes. Looks to me like you'd want to see Mohawk test 123.81 from that July 31st low out here. So let's look at some of the companies themselves that have been beaten up. D.H. Horton, not a huge move, 1% higher today, but they did have already a slightly lighter test out here, and that's the 1999 low from August 7th. 6.1 million shares with 5.2 million shares. That wasn't light enough for me to believe that that does not get tested once again. You're still, 9 cents higher than the previous low. So you really didn't prove the point. You didn't go below and then close back above it. So my guess is you're probably going to see these stocks come back down to that $20 level here fairly good or soon. Let's take a quick look at here and see what we're doing. Yeah, 25 points. It looks like they've driven it as hard as they can. Almost 3 billion shares, so volume is good today. Lennar looks better, so let's take a look at that. I don't see a lot of downside on these. I just think that they are going to go back and test the lows. Lennar Corporation looks to me like an ABC down. Let's look at the expansions out here. You could look at it as an ABC up, but I don't see any volume in the last 4 or 5 days as this thing moved up. To see if we have anything. 41. Let's take a smaller look at this right here, and that would make the A this September 17th high, the B the October 2nd low, and the C the spike of yesterday, which would give you basically a 66% retrace on this thing, setting up an ABC down back to, what would that be? $36.84. So I suspect you're at least going to come back and test this gap before these housing stocks rally significantly, and you more likely are going to see that $35.74 low. And that would make it a 1.382 retracement at 35.38. Most likely, Lennar, after its bounce in here, would probably get back into this gap, and you've got a fairly decent move out here that would set that up. Okay, what else do we have going on out here? Other stocks in the housing industry out here. Let's take a quick look at Ryland, RYL. Yeah, this thing's got a kind of a small reversal out here, but high volume low at $31.22. You got about an 80% chance of that being tested the next 3 months, I would say. So that would probably be where you're looking at. It's a beautiful high volume low, but more than anything on high volume lows, you want them to prove the point. That is, get down there, close, or at least intraday go below 31.22, and either that day or in the next few days close back above it with probably 2 million shares, and that would put a low in for Ryland. Toll Brothers, which is the high end of the market. Well, Ben Bernanke himself hasn't had a good opportunity to get a house loan. What's going on here? Come on. Toll Brothers? Oh, 1L. I should have known. It was me. Anyway, Toll Brothers, looks like they may have completed an ABC down. Let's take a look at this thing here real quick. Okay. Expansions. What is that? 37. You had a fairly decent retracement out here. Let's take a look at this. If we make our A point the 37.62 of July 2nd and the B point, now zoom in here, the B point, this low of August 7th, and the C point, the September 2nd high at 35.94. That sets up an ABC down. You're 1-to-1, 10% or 10 cents lower, 8 cents lower than the October 1st. So you did complete an ABC on that one, and I don't see a lot of volume in this one yet. But if you thought that housing was going higher, this one's completed an ABC down. You really didn't test anything. To me, the buy on this one would be 29.64, which is the October 9th, 2013 low. You have 5.6 million shares there, and that would set up a longer-term buy pattern. And you have lots of support there at 29.80, 29, and $30, let's call it, and a completion of a little shorter-term ABC down. That one would be the one that I would be watching out here if you had to play the housing market. It looks the best of the bunch so far. We'll continue looking on it. Whatever. Okay. What else do we have going on here? We're watching this market up 23 points on the S&P cash now, just under 3 billion shares on the New York Consolidated Tape. So we'll continue watching this. Some big bounces. A lot of people buying these stocks on the dip. If you have been listening to the show, like I said, the puts I've been buying November and December puts, so I don't think this will be over in a day, nor did I think that this would be a cakewalk back down to the lows. And as I will be saying for probably weeks to come, I'm sitting on my hands until I get a signal that I am wrong to the downside, and that we should buy. And 24 points on the S&P cash, kind of a nice little deal out here today, especially when you see that we went down to 1925. But rather short-term money. And again, I'm for life-changing money, not cashing in and making an hourly wage. AMCX, AMC Networks. I hear there are going to be a lot of good movies coming out this fall. AMC Networks, of course, more on television, but that's the first thing I thought when I saw this. AMCX is the symbol on this one. Of course, maybe some new television shows coming out. It's going to be hard for them to probably duplicate the success, though, that they had with some of the shows like Breaking Bad and Mad Men. With those off the air, you can kind of see why this thing has come down and off fairly strong. I'm pretty sure this is the same one. Let's just look at the profile quickly to make sure. Yeah, this is the same one. Just wanted to make sure. Preacher. There's some. Yeah, that's gonna be kind of interesting. Anyway, AMC, this low. And the Walking Dead low looks pretty good. I mean, if you wanted to buy something out here, it's kind of tough to find anything that's tested the lows with this light of volume. You had that slam down on May 8th with 6.5 million shares. You got into it with less than a sixth of the volume. From October 7th, you got the retest out here today, and energy wasn't all that exciting. Now, you may have to wait for this to consolidate a little bit, but kind of interesting out here. Saw a lot of these stocks that have been in probably the worst sector of all of them, and that is the retail teen consumer for clothing. ANF making a fairly interesting test of its low. This is kind of the low end of this this particular one. The May 28th low, $34.13, 5.6 million shares on the May 28th. So we've gone below it. We are closing above it. And today, 1 million shares. Yesterday, 1.6 million shares. So a fairly decent test on some of these retailers out here. I think this is, ANN. This is not a bad-looking chart either out here. You had some real signs of strength up to 42.96 on August 26th. And, decent volume, 3.5 million shares. Today, 322,000 shares so far as you started looking at these gap ups. So if you are bullish, this is the time to buy some of these stocks out here. But again, I think over the next couple of days, we start seeing these earnings come out, and it's going to be very, very hard to take these. And again, I think we're probably going to gap down, probably going to see a big gap down. And I think that's what's going to set the hook for the top in this market, and pretty much people saying that the highs are coming back are probably going to change their tune. Anadarko Petroleum, this thing had a huge sign of strength on April 3rd. We are back into that finally today, up on almost 45 million shares. We're into that candle today with 6.7 million shares. I would have liked to see just a little bit more of that tested, but again, crude prices continuing under pressure today. When we look at crude, what are we off? Off $1.38 at 87, but kind of at where I thought support would be, which is somewhere around this $87 level for first support. I suspect we're going to see $85 and then a fairly decent bounce. Trading range probably between 87 and 91. Probably for a little while before this thing gains more steam to go try to blow out those lows. So keep an eye on that. We got a lot more stocks to look at. You can give me a call at 877-927-6648. You can post a message to me via email at path@tfnn.com or post a message in the den.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And Jimmy Buffett is out here today asking Spotify, Pandora, Apple all for a raise because they're making absolutely nothing. 98% of what these guys make now is on not on their music being played by these companies, but by touring, which is probably not a bad business, but I have a feeling that they kind of like the radio business where every time their record played, they got a quarter, and they went to the mailbox every month and got a big check. Maybe 10, 20, 30 grand. Just walk out to the mailbox. Now they get whopping checks for $2,000 a year from the government, who puts together everything they have. $2,000, $10,000 a month, $2,000 a year. I'd say that I'd be a little upset, but we don't need to hold any kind of seance to dredge up some money for Mr. Buffett. He does extremely well, especially down here in Tampa and Key West. But it is interesting. American Apparel, again, these things have looked horrible. One day is not going to change my opinion on this market, no matter how much and how hard they push on these markets. Again, we're going to be knee-deep in earnings next week, and there may be some movement in the inner part of this day, but I suspect that we are headed for that 1905 on the S&P cash, and I don't think that there's anything we can do to change that. I think we're going to see a sea of people guiding down that had to worry about prices going up for export-import businesses, and we're going to see some winners and losers, but mostly losers. And did you see the movement on the ruble? Ruble. Not ruble. What is that? The Russian currency. Maybe in the den somebody can bring it back up. I want to say rupee, but that's India. And whatever the currency. Ruble, yeah. Rupee and ruble. Anyway, it got smacked down today, so Putin, he's probably not going to be too happy. Expect him to start causing trouble very, very soon. Ruble. Yes, it is rubble. The ruble is rubble. A Freudian slip, apparently. But anyway, just keep an eye on that. My guess is that we start seeing problems screaming out of Russia in the next day or two because they can't afford probably sub $100 a barrel crude for the foreseeable future. So I'm still looking for world events, for the Walking Dead that have Ebola. I guess my guess is that's going to be the biggest costume for Halloween, and that's going to be Ebola. I guess the costumes are going to be what? Bleeding everywhere? It's going to be tough to figure that out, but I don't know. I'm going to really watch how, over the next few days, how some of these big cruise ship companies respond. We saw the instant reaction, but now we're going to see the longer reaction. Are people with Ebola and all the other deadly viruses that seem to be going around, will that be enough to spook people off of a place that has been rather well known for having huge problems with viral infections, i.e. cruise ships, veritable petri dish of bad things happening? I think, maybe there's the sum of all these bad things happening will kind of hit finally. Anyway, I'm still bearish out here. I think we probably may have a couple of days of bounce out here, but I don't think much higher. I think those earnings are looming. We'll see you tomorrow, same bat channel, same bat time. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.